Welcome back. Let's talk to Mike van Dulken. He's the head of research at Accendo Markets. Morning to you, Mike.
Morning.
We're going to talk about stock CRH. We've got a slide here. What are your thoughts here? Is this all about exposure to the US of A?
I think for the moment, yes. Especially given that strong opening share price from the beginning of the year, down at 2650, already at 2750, and I think that signals the start of a bullish flag, which could take us to 28 pounds or better. It had a tough time from end of October, but it's been a strong reversal since the middle of December. I think, fueled by optimism about the US tax reform, which I think the company has said it should see a bit of a windfall from revaluation of things before it moves into the new year, and thereafter should benefit from a lower tax rate. So
right.
Many companies have said that we need to revalue a lot of deferred tax and assets to start with a clean playing field, and that gives in many cases a short-term windfall before you move on to just a lower tax rate going forward. So this should be a good beneficiary. Strong, big US exposure. Further exposure should Trump get through any more kind of infrastructure stimulus to keep his ball rolling. He's got his one big piece of legislation behind him. That's good news. Can he get another one to keep it going? If so, this should be a beneficiary. Could do £28.
It was a clear bear trap in December and a snapback, the shorts covering, a sort of mid-term move with that little pullback, as you say, a flag, a resting period for the bulls. That looks reasonably good.
Yeah, some might want to wait for those highs of mid-November to be cleared before really jumping on board. But I think for the moment, there's just three strong, very strong candlesticks for January so far. For the moment, a tough end to the year for CRH, but it could be a better start.
Right, thank you very much indeed.
Thank you.